Listen, I know your time is precious, so I won't take much of it, but you stick with me and we will curate a beautiful watch list and an earnings watch list that you need to see. So pay attention. Let's get right into it, baby. All right, guys, so check this out. We're going to run through a little bit of everything. Let me get my big head off the screen here, though. We're going to run through everything. First, we're going to look at the overall market, the S&P 500. We're going to run through that. Then we're going to run through the overall tech-heavy QQQ. We'll check out the NASDAQ and a few other of the indices to see where we sit in the overall market. And then, of course, we are going to go through a few of the things I'm watching. And then we're going to go through a few of the earnings coming up this next week, okay? So pay attention, guys. We're going to run through it quick, and we're going to do it thoroughly. So the S&P 500 now, if you watch that short, we talked about this thing backing off this area, pulling back. I wasn't expecting that big of a pullback, but it did hold that new lower high of 403. Ramping up higher above a 200 curling to the north, 200-day moving average now looking really, really well in this market. Still just trading sideways. We've been talking about that 410, that and the resistance area of 420. So that 410, that 420, that huge area of resistance. Can we break through and turn it into support? Well, that's what we need to find out. The next up we're going to look up as the QQQ. Good old QQQ, tech heavy. If you don't know what the QQQ is, there's about 100 stocks in this. It's very tech heavy. It's got your big stocks like Apple, like Meta, Microsoft, Tesla, all of those stocks, and we're also going to run through those stocks as well to see where they sit. So the QQQ sitting here above a curling 200-day moving average, looking very, very nice. Now creating this base, this top at 320. We finally broke through. The last time we broke through, we had a nice pullback, creating a new higher low on the daily. That looks really, really good for the overall market because the QQQs does seem to be holding most of this market up. So when we look at the QQQs, we want to see this thing hold those new higher lows just like it did. And we want to see, where is this going to land? Will it break out of this 320-350 area? Or are we going to pull back one more time to see maybe testing 320 or another area of price action? Next up, we're going to look at the IWM. What is the IWM? The Russell 2000. It is your small cap. Now, what we've seen here on Friday, it was a beautiful push right into resistance. It started to stutter. It started to step, but it broke through of that downtrending line. So is it going to be able to create another new higher low in this area and continue higher into that 177 area of resistance? We will definitely we will definitely have to take a look at that very, very soon. So let's see if I can just go ahead and bring this up really quick for us. What we're going to look at next is going to be, here we go, a few of the stocks that I am looking at. No, first we'll run through the tech. So let me go ahead and bring that up. So let's start with Tesla, shall we? Good old Uncle Tesla. Good old Uncle Tesla's just chilling here. After that unexpected earnings failure, it ripped down, broke down, then brought back up, holding at base around 162. Now breaking higher, trading at 170.06. Absolutely beautiful to see for Tesla. Can it hold this area? Now this might be a nice area to risk off of if you want to, but make sure you're using risk management, guys. We don't want to just go ahead and grabbing anything all willy-nilly, just grabbing shares. Now, I do want to point out that Tesla is below a 200-day moving average. I don't really care for stocks that are trading below this, but we do cover Tesla because it is a big boat. It's a big mover. So that being said, keep this thing on your watch list, because if this thing starts to rip, QQQ is not going to hold back. QQQ is going to start ripping as well. So what else do we want to look at here? Oh yes, Netflix. You guys, we have to look at Netflix. Netflix is an absolute crazy earner, okay? So when we look at Netflix, what are we looking at? Well, we have a huge pennant formation, but first off, we're above a curling to the north side 200-day moving average. This pennant that's forming right here in this area, absolutely scrumptious, Okay, I don't know what, maybe I'm hungry. I haven't ate breakfast yet. That's why I keep referring to things that are delectable. So Netflix trading here at 322.30. I really feel as if this thing breaks out above this, that we might have a nice continuation. So these aren't buy or sell recommendations, guys. These are things that I'm looking at, that I am taking interest in. I have no idea what's actually going to happen in the market. So Netflix for a breakout in this area, that's what I have on my watch list. Let's look at Microsoft. So if Microsoft wants to show its true colors as it has, it's going to continue to be a leader in this market. Now on volume, another push to the north side. What a beautiful time to be Microsoft in this market, because earnings beat expectancy and ripped up to the north side, now trading sideways above a 10, 20, and 30-day moving average, not to mention a curling 200. So looking very, very good for Amazon. I'm sorry, Microsoft. But Amazon, in the other case, is above that psychological $100 area that I've talked about so much. Trading above that gives me a little bit of hope. Now I say hope because it's still trading below that 200-day moving average, and that 200-day moving average still needs to be broke through and retested to show that this thing is ready to head further to the north side. And then of course we have Meta. Now Meta, we were looking at this overall push in the market was, well, not, you can't say it was expected, right? Nothing's really expected. If everybody could expect what needed to be expected, we would all be rich, right? So Meta beat earnings unexpectedly, beat earnings, right? Ramped way up and then traded sideways for a long time. Now we've had a pullback the past 3 or 4 days, but you have to understand it's still above a 10-day moving average. Okay, meaning it is still holding and showing, even on these pullbacks, that it is still one of the strongest movers in this market right now. So you cannot bat your eye at Meta. Don't take your eye, don't blink. Meta is still looking very strong. Next up, excuse me, we have NVIDIA, good old NVIDIA, trading up above that base area of 280, now trading at 286.52. If this thing wants to come back and retest that 280 to show that it is a strong area of support before heading higher, I think that would be the best bet for NVIDIA. And then we cannot sleep on Apple, of course, good old delicious and nutritious Apple. AAPL looking very good at its yearly highs right now. My question is, where is the pullback going to go? So on these huge pushes right into an area of resistance, a double top is going to be set up here around 175. My question is, when it does hit this double top around 175, 176, how far back does it pull? If we can pull back, create a new lower high above that 167-ish area, I think that's going to look very, very strong for the overall market in general, and Apple, of course. So one last one, we'll look at Google. Google's just kind of trading sideways. The thing with Google is it needs to break out of this area. Everything else is considering itself a leader, as to where Google is just kind of at a lull. It's at Mr. Sleepy time right here, even after earnings. So that being said, I need to see a nice breakout on Google. If they can break out of this cup and handle formation above that 110 area, I think we can see a nice push, but Google is lagging a little bit. So what I want to show you is a few of the stocks that I have curated for you. And then we'll bring up a few more that actually is, they're coming out with earnings. So we obviously need to be careful. Anything that comes out with earnings, you need to be careful in. So let's take a look at ON Semiconductor. As you guys know, I like to play those earnings gap ups, but this earnings gap up I missed, so I just put it on my watch list because I wanted to see how it was going to, excuse me, how it was going to hold in this area on this downtrend line. Well, as you can see, we broke through that trend line, so I got a nice little trade right here, risking this base of 77. So we're gonna see what wants to happen in this area, but I am in this stock. Just want you guys to know I do have a biasy on this, but on this breakout, I do expect it to continue. If it doesn't want to continue, this is my stop loss. If I stop out, then I'm going to wait for it to come back down to this 200-day moving average before trying to get more shares in. But I do like this. I like the tightening range. I like this shakeout right here. It shook everybody out, and now it's back up to here. So I'd like to see this thing break out and continue higher. I think that would be really, really nice. Of course, DraftKings, guys, we had an earnings gap up on DraftKings. I am in DraftKings as well. DraftKings looks very, very nice to me. Now, it is extended, guys. If you look at the daily, it's well above a 10-day moving average, but I did play the earnings gap up. This is my type of move. It's my type of stock. If you're looking at the RSIs, everything's burning overbought, 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 overbought. I don't care. This is the way I play the earnings gap ups. It's not your trade, it's my trade, so this is where I'm in. That's just where I plan on getting out. I'm risking $100, it's no big deal. But I love those earning gap ups. I love that it gapped up right into this area of resistance. It pulled back that same day and held new higher lows. So we're gonna see what wants to happen for DraftKings. If we can get above this area, I think it is a very pivotal area indeed for DraftKings. So don't sleep on Netflix. I'm definitely going to have that as one of my #1 watches, is Netflix. Let me see what else I got on here for you. We have Lulu. We got to bring up Lulu. Lulu is following that 10-day moving average on the daily above a 200-day moving average that's curling to the north side, and then running right into resistance right there around, and I say this because it's a big area, around $400. Now trading at 386.71. This thing moves only 1.5% in average on the day. But why I point this out is because we're right into an area of resistance, and it's creating a tighter and tighter range on the daily, holding that 10-day moving average and squatting down on top of it. It's very, very tight for Lulu. So when you see things like this, guys, definitely want to keep an eye on it, and we need to keep an eye on it because it could break out. We might get a nice trade to the north side, but on the same hand, you know I'm a bear with bull horns. I like to see those resistance actually hold true. So if we start to see this stutter, if we start to see this shake in this area, we might get a nice pullback. So break out above, maybe come back and retest, or run into resistance now and pull back and never look, right? We'll see what happens. HUBS, I want to bring up HUBS because this was on our watch list last week, and it did exactly what we needed it to. The only issue is when I got in on this trend line, it broke its trend line, it broke my stop, and then it pushed up higher. So my stop was set just below this area, and they got me for a nice little loss. And then when it broke out again and it got up above this area, I was not in it that second time. So now, seeing the bullish pennant formation in this area, if this thing wants to break out above this, I might want to take another peeky gander. So those are a few of the stocks that I'm looking at that are on my watch list. I try to keep it down to a minimal. And what we'll look at is also what's happening with the earnings. We have a few earnings that are coming up here, and I'm happy to run through those. So let's look at PYPL. As you guys know, in the financial sector, we had a big hit, okay? But as you guys seen, I brought up a nice video showing that we went right down into an area of support. So if that support holds for XLE, I think we will be doing, or I'm sorry, XLF will be doing just fine. Now, PayPal looks like it's right at this bottom base. Very, very nice, coming out with earnings on Monday. So Monday, after market Central Standard Time, we are going to have PayPal come out with earnings, and if it can gap up above this 200-day moving average, which is a pretty big gap, but if it can gap up above that, I think it's going to look really good for PayPal. So definitely don't sleep on PayPal's earnings. Airbnb, oh goodness gracious, why I don't have Airbnb on my watch, I have no idea. But right here, it's creating this flag. Like if we just draw this out really quick here for you guys, you'll be able to see exactly what I'm talking about. So I have done a little research on Airbnb. So right here's your downward trend line. It's creating new higher lows now right here, and it's getting nice tight price action in this area. So if it wants to rip above this, this might be the breakout area, but what our main concern is on Tuesday, after the market Central Standard Time, we're going to have earnings coming out for Airbnb. So I did a little research on this. I like the fundamentals and stuff. Now, the fundamentals are all squashed if they don't match with their earnings, right? So if they come out and they don't match their guidance, they don't match their earnings, they don't match their revenues, it's going to look really bad for the stock. But if it holds true to what they think is going to happen with Airbnb, well then Airbnb is going to take off to the north side. And I'd like to be a part of it. So that's what I have marked out. That's what I'm keeping an eye on. And I'd like to see some further continuation from Airbnb. So we will see very soon. Let's go ahead and take a look at another one here. Disney. Let's not sleep on Disney, guys. So Disney is creating this beautiful pennant formation right here. I have an alert set just above this area because it shook the rest of these guys out. Well, I guess it didn't break this bottom of 96.37, but it did break this area of support. And now shaking these people out, breaking back up into that area of support. If it can hold and create a new higher low from this, I think that's going to look really, really good for Disney, holding that trend line to the upside. But the whole reason why we're talking about it, guys, is on the 10th. On the 10th, which I believe is Wednesday, they're going to come out with their earnings. So make sure your eyes are open on Disney. Get your alerts set. All right. This is a slower mover, guys. This is Tyson Foods. So Tyson Foods is creating new higher lows in this area. But one thing that I wanted to point out with Tyson Foods is if we look back at its history, this is a huge area of support on that $57. It's trading at $60.69 right now, below a 200-day moving average. But keep in mind that if it comes out with good earnings, this might be the base. The 56 might be the base. So keep that in mind. Make sure you're marking these on your charts, guys. So this is going to come out on Monday. Tyson Food Company, it's a big boat stock, okay? It moves very slow, 1.8%. But if you find these lows here, these might be a nice hold for over the summer. And these aren't buy or sell recommendations. They're just a big talking chin right here on YouTube. Don't sue me, please. So we're going to go over one more, and we'll make it a fun one. RBLX. RBLX, and we'll go over Lucid too. So RBLX, right here, we have earnings coming up on the 10th. Do keep that in mind. Now, I don't believe in Roblox, but the earnings are to be expected. When the earnings come out, if it wants to gap back up into this $46 area of resistance, I think that might be a nice area to take a short sale in. Now, I do have a bias against Roblox because I personally think they are going to fail. Now, I could be completely wrong, but I have been trying to find a good area to short Roblox for a long time now, and it's not been working out too well for me. Now, I've made a little bit of money, but I'm looking for the longer move. I'm looking for the longer expected move. So it's hard to get in and hold in on something if it's not giving you the proper price action. So I tried to short back here on this, and it continued higher, now gapping right back down to that price action area that could not push up through. So I had the right idea, but had the wrong timing, and that is what it's all about in this market. So let's look and see what happens on the 10th, which I believe is Wednesday. We're going to see what happens for Roblox. If they want to gap up into this area of resistance, maybe I can try that short one more time. But these are my thoughts, not yours, so make sure you're doing your due diligence. And as promised, I'll give you Lucid. It's not LUCID, it's LCID, Michael. So let's keep on keeping on. Lucid down here at these bases. Yes, I know it is so speculative, but we need to see what happens for earnings. I don't play the earnings, I play the reaction to the earnings. So I'd like to see this thing gap up, trying to hold new higher lows if we're looking for the north side. If not, and this thing gaps up too high too fast, I think this $12 area is going to be another area of resistance. So looking for the shorts on this, anything below a 200-day moving average, I'm not a huge believer or a proponent in. So LCID, we're going to see what happens when these earnings come out on Monday. So guys, stay tuned. I'm pumped that you're here with me. Leave me a like, leave me a subscribe. We're going to give you these stock market watch lists every Sunday, but you can catch me doing live commentary, live trading, and live analysis on Friday, 8 a.m. Eastern. We'll see you there, guys. Peace.